Welcome back, everybody, to the Deep Dive. This time, we're going to take a deep dive into Servotech Power Systems Ltd's Q3 FY25 results. We've got quite a bit of material, actually. We've got their press release, we've got a glance at their financials, and then we've also got some investor questions. So we're going to try to piece all this together, give you a good sense of what's been going on with Servotech's performance and what it means for their future in this, really exciting renewable energy sector.
Yeah, it's a really interesting space to watch right now. A lot of companies are trying to find their place, and Servotech seems to be making some pretty big moves, especially in India.
All right, so Servotech's consolidated revenue, this is pretty mind-blowing. It went up by 315.3% this quarter, hitting ours 21,683.2 lakhs. And even more impressive, their profits jumped up 616.8%. So clearly they're doing something right. But the question is, what's driving these incredible increases?
Yeah, that's the million-dollar question, right? Are they just selling a lot more? Or have they found ways to be more efficient, maybe cut down their costs? We'll have to see.
Well, their press release highlights two key areas they've been focusing on: EV chargers, so electric vehicle chargers, and solar energy solutions.
Yeah.
And they're already pretty big in India's EV charging market. They've got about 35 to 40% market share right now. And they want to take that up to 50, even 55% by producing, get this, 12,000 DC fast chargers just this year in FY25.
Wow, that's a bold goal. But it makes sense, the whole world is moving towards electric vehicles. Everyone's talking about sustainable transportation. So the demand for EV charging infrastructure is just going to skyrocket.
Absolutely. And Servotech's trying to get ahead of the curve.
Yep.
Okay, so let's dive into those numbers, into their financials a little bit. Their consolidated statement for Q3 FY25 shows their total revenue reached Rs 21,683.2 lakhs. Like I said, that's up 315.3% from the same quarter last year. And their EBITDA, which for those who may not know, is a good indicator of their core profitability, reached Rs 1,672.8 lakhs, which is a whopping 420.1% increase from the previous year.
Yeah, that EBITDA number is really interesting. It basically tells you how much profit they're making from their main operations, without all the noise of taxes and interest and stuff. So the fact that it's basically quadrupled shows their business model is getting much more efficient.
Yeah, that's a great point. Now, their profit before tax, PBT, reached Rs 1,282.5 lakhs, up by a massive 590.2%. And profit after tax, PET, was Rs 798.7 lakhs, a 616.8% increase. And this isn't just a one-time thing either. When you look at their 9-month performance, you see the same story: continued growth, revenue up by 142.1%, EBITDA soaring by 173.1%, and PAT seeing a 184.1% rise. So consistent growth, which is always a good sign.
Absolutely. Shows they're not just riding a wave. This looks like a sustainable trend, which is really promising. Now, have you had a look at their standalone numbers? I'm curious if it tells the same story.
Yeah, actually, their standalone figures are pretty similar. In Q3 FY25, their standalone revenue hit Rs 18,185.7 lakhs. That's up 264.8% from the same period last year. And their standalone EBITDA is a massive Rs 1,698.1 lakhs, up by 433%. Their standalone PBT also skyrocketed to Rs 1,309.4 lakhs, which is a 616% increase. And the standalone PT jumped by a crazy 659.8%, reaching Rs 829.7 lakhs. And again, over the 9 months, you see the same trend. Standalone revenue climbing by 148.6%, EBITDA up by 181.8%, and PAT jumping by an incredible 200.3%.
Wow, that's really impressive. So both their consolidated and standalone figures are showing this consolidated and standalone numbers, which I think could be interesting to unpack. Did anything jump out at you?
Yeah, I mean, the consolidated and standalone figures are pretty close overall, but you're right, there are these little variations, especially in EBITDA and PBT. It makes me wonder if their subsidiaries are contributing quite as strongly as the parent company, or maybe they have slightly different cost structures.
Yeah, that's a good point. Sometimes those little discrepancies can tell you a lot about a company's structure and how the different parts are performing.
Exactly, it's something to keep in mind. Now, Servotech's managing director, Raman Bhatia, he's put out some pretty optimistic statements about their future. He's really highlighting their position in the Indian market. And he's predicting that EV chargers are going to make up, the vast majority of their revenue, something like 70 to 75%. Pretty soon.
That's a bold prediction. I mean, it shows they're really all in on this EV charging strategy. But it also makes you wonder, are they prepared for the challenges that come with that? The competition, the potential risks.
Yeah, exactly. What happens if some new technology comes along and suddenly their EV charging tech is outdated? Or what about government policies? Those can change so quickly. and that could have a huge impact on their business.
Oh, absolutely. The regulatory landscape is a huge factor in this industry. They need to stay really agile to adapt to those changes.
For sure. So we've got this really strong financial performance, this big bet on the EV charging market, and some potential risks to think about.
Oh,
Before we move on, I think we should mention there's been some interesting activity with Servotech's ownership structure.
oh, right. Yeah, that could be really significant. Let's dig into that.
So the thing about Servotech's ownership, you know what happened.
Yeah, it turns out there was a conversion of warrants into equity shares.
Okay.
And looking at the documents, it looks like it mainly involved Raman Bhatia, he's one of the promoters of the company, and then Mahesh Bays, who's a non-promoter. And this resulted in an increase to their paid-up capital from Rs 22,045,348 to Rs 22,46,045,348.
Okay, but help me understand this. What does all that mean?
Sure. So imagine like a pie, right? And
Yeah.
this pie represents the ownership of the company. So
Yeah.
when warrants are converted into shares, it's kind of like, you're slicing that pie into more pieces.
Ah, okay.
Which can dilute the ownership of the existing shareholders a little bit.
I see. So if you have more pieces, each piece is worth a little less.
Exactly. So that's the potential downside. You get this share dilution. But on the other hand, it also shows that these guys, Bhatia and Vase, they're pretty confident about Servotech's future. They're putting more money in, basically, showing they believe the company's value is going to keep going up.
So it's not necessarily a good or bad thing, but definitely makes you curious about where they see the company going.
Yeah, for sure. It's a move that investors are definitely going to be watching closely.
Okay, let's get back to those financials for a minute. We talked about the big picture, but let's look closer at the details of their performance.
All right, so breaking down their consolidated statement for Q3 FY25, their total income hit Rs 21,629.79 lakhs, which is a huge jump from the Rs 5,215.87 lakhs in the same quarter last year. But of course, as you said before, strong revenue growth doesn't automatically mean profit. We got to see how well they're managing their expenses.
Right, you don't want those costs spiraling out of control. So what's the situation with Servotech's expenses this quarter?
Well, their cost of materials consumed in Q3 FY25 was Rs 16,853.38 lakhs, which is a lot higher than the Rs 4,245.21 lakhs from the same period last year. But to be fair, this increase isn't necessarily a bad sign. It's normal for material costs to go up when a company's growing like this, fulfilling more orders, that kind of thing.
Right, so the cost of materials is up, but is it going up faster than their revenue?
That's the question. And when you look at the numbers, it seems like Servotech's actually doing a pretty good job managing those costs. Their revenue has grown much faster than their cost of materials, which suggests they've got a good handle on their supply chain and their manufacturing processes.
That's good to hear. Now, what about other expenses, like employee benefits, finance costs?
Right. So their employee benefit expenses for Q3 FY25 were Rs 1,242.68 lakhs, which is a significant increase from Rs 200.69 lakhs in the same quarter last year. This could mean they're hiring more people, investing in training, things like that to support their growth. And then their finance costs came in at Rs 45.59 lakhs compared to Rs 13.78 lakhs in Q3 FY24. This could be because they're borrowing more money to fuel their expansion, which makes sense.
Yeah, it's all part of growing a business. Now, how about their standalone performance? Do we see the same trends in those expenses?
Okay, so for their standalone figures in Q3 FY25, their total income was Rs 18,135.25 lakhs, a big jump from Rs 4,984.56 lakhs in the same quarter last year. So again, that positive revenue trend we saw in the consolidated figures.
So the top line growth is looking strong there too. What about those standalone expenses though?
Let's see, their standalone cost of materials consumed in Q3 FY25 was Rs 14,329.52 lakhs, up from Rs 3,708.97 lakhs in Q3 FY24. But as we said before, I got to look at it in the context of their overall revenue growth.
Right, context is key. What about their employee benefits and finance costs, standalone?
So their employee benefit expenses for Q3 FY25 were Rs 12,270.33 lakhs, compared to Rs 203.17 lakhs in Q3 FY24. And their finance costs were Rs 48.60 lakhs versus Rs 11.28 lakhs in the same quarter last year. So pretty similar trends to what we saw in their consolidated financials.
All right, so we've really dug into these financials, but I want to go back to Servotech's big focus on the EV charging market. They're saying EV chargers are going to be the biggest part of their revenue soon. That's a pretty ambitious goal. What do you think?
Yeah, it's definitely ambitious. I gotta say, I'm a bit skeptical. The EV charging market is getting really competitive. New players are popping up all the time. Servotech's gonna have to work hard to stand out.
Yeah, it's not going to be easy.
Yeah.
What do you see as their biggest challenges in this market?
Well, first off, they have to keep their technology up to date. The EV charging world is constantly changing, new charging speeds, battery tech, connectivity features. Servotech can't fall behind.
So innovation is key. What else should they be focusing on?
Building a strong brand, building trust with customers. There are already some big names in EV charging. Servotech needs to convince people that their products and services are the best.
Sounds like a lot of work. But they're not starting from zero. They've got a good track record and experience in the Indian market.
True, they've got a good foundation. But to really succeed in this market, they'll need to be smart, innovative, and build strong partnerships.
All right, so we've covered their financials, their EV ambitions, and some of the challenges they face. Now, let's get to those investor questions we talked about.
Yes, let's do it. These questions are really helpful to understand what investors are thinking about, what they're looking for in a company like Servotech.
So what are investors asking about?
Well, one thing you're curious about is how the stock market is reacting to Servotech's performance. Are investors getting excited?
Yeah, are they buying up the stock or are they holding back, waiting to see what happens?
Yeah. It seems like kind of cautiously optimistic, I guess you could say. Servotech's share price has gone up a little since they released their Q3 results, but it hasn't been a huge jump.
So maybe some investors are impressed by those growth numbers, but others are a bit hesitant, because of the potential risks we talked about.
Yeah, that could be it. They're probably weighing the good stuff, the strong financials, the EV charging focus, against those unknowns like competition and those things.
Makes sense. What else are investors wondering about?
A lot of the questions are about competition. How does Servotech compare to the other players in the EV charging market?
Right, because it's getting pretty crowded out there.
It is, but they seem to have a pretty good position in the Indian market, especially when it comes to government contracts. But they're definitely facing competition from big international companies and even some newer startups that are popping up.
So it's not a sure thing for them. They've got to keep innovating to stay ahead.
Absolutely. They can't just rest on their laurels. They need to convince customers that their technology is the best, their service is the best.
So what about the analysts? What are the experts saying about Servotech's future?
Well, it's a mixed bag. Some analysts are really positive. They see a lot of potential for growth, especially if this EV market really takes off. But others are more cautious. They're worried about the competition, the technology changing so fast, and the whole regulatory landscape, which can be unpredictable.
Right. So just like we've been saying, there are a lot of opportunities, but there are also challenges ahead for Servotech.
Yeah, for sure. It's a really dynamic situation. It's going to be interesting to see how it plays out.
Well, I think we've covered a lot of ground today. We looked at Servotech's financial performance, their EV charging plans, and some of those key investor questions.
We really dug deep into the numbers, the trends, and the potential risks. It's been a true deep dive.
It has. And hopefully our listeners are feeling more informed about Servotech and can make their own decisions about what they think of the company. But before we go, I want to leave you with a thought. This renewable energy sector is changing so quickly. What do you think Servotech's next big move should be? What should they focus on to really succeed?
That's a great question. Should they double down on this EV charging thing, maybe explore some other renewable technologies, or maybe find some strategic partners to help them grow even faster? There are so many possibilities. It's really exciting. I'm definitely curious to see what they do next.
Me too. And if you're curious too, be sure to check out Servotech's website. They've got all the latest news and updates there. And thanks for joining us on the deep dive. We'll be back soon with another fascinating exploration of the business world.